Hey guys, Bryant's here. It is Friday, November 10th, 2023. It's 4:30 a.m. in the morning Eastern time, so the market has not yet opened. Decided I'd just record this video. I haven't done one like this in a while. That is a recap of the week, as there's just been so much confluence this week, and I'm pretty happy that some of you guys are starting to pay attention to some of the confluences. I noticed some of you guys are trying to become a little bit more systematic in your trading based on some of the one-on-ones in which I've been having. I figured this would be a great opportunity to kind of simplify some of the confluences that you guys may be looking for. We already have the QTA weekly levels and the intraday levels, and then you guys have some of the gamma levels. Now, having some of these more advanced levels on your charts, sometimes you don't want to ignore just basic technicals, because at the end of the day, any level on your chart is just a basic form of technical analysis. Meaning if price comes down here, hits this level, and then it bounces here, and then it bounces, this is referred to as a double bottom, and then traders will look to take the long trade once it cracks a previous resistance level right here. So in this case, price goes like this, it comes here, it comes back down. This is considered a resistance level. Price double bottoms off of this now support, and then it rallies, it breaks this level. Traders will look to enter here and ride the momentum up until the next resistance level. That's just basic technical analysis. That is support. We have resistance on our charts. We have a little bit more advanced levels on our charts that are generated from some of the scripts. However, you guys will know at the start of the week, I encourage you guys every Sunday or Monday morning to use the Advance GEX tab here and generate a report for yourself for the upcoming week. Next week is a large OPEX as it is the monthly OPEX. So it's letting us know right now for next week, just looking at the Monday through the Friday expiration, you guys can see that this is a large options expiration. This is letting you know the weights. It's too early in the week to do this for the next week, so I'm just using this as an example. I'll do a dedicated video at the end of the month or at the start of December, showing you guys, as I've done before, what I look for to start the week when I'm looking at this page here. But that video was done earlier in this year, and it's probably buried in some of the weekly recap videos. So I want to do a dedicated video around that. It's pretty simple. All I'm doing is just selecting the upcoming week's expirations, and then I'm taking note of anything significant. Say, for example, like this is letting us know, you see this little bubble right here. It's letting us know it's pretty important. The same thing, this is letting us know this is pretty important. This is the highest call open interest strike. When we combine all of these expirations for next week, this is the highest positive gamma strike. So that's pretty significant. I'm going to then mark this level on my chart. Then we have this little bubble right here. This is letting us know this is pretty significant, as this is the gamma flip level. So 437. Then this is letting us know this is pretty significant. Oh, look, there's two bubbles here. This is really significant. Two bubbles here. This is pretty significant. And then if we scroll down here, we can see if there's anything else. Oh wow, a couple levels down here, but guess what? This is almost 8% below the current spot price. This is a little too far to even take into consideration, especially going into a monthly OPEX. It's likely due to some massive hedging that was taking place from a couple months ago, possibly a month ago, or it was probably a lot of open interest that was being sold, as this was insurance that was being sold to people that were potentially thinking the market was going to sell off to 400 a couple months ago. Another thing that's pretty significant is this is a nice deep blue level, so I'm going to probably mark that on my chart. Usually when they clump together is when I like to group them, and then I call it the high open interest range. So if I were to just drag over the Discord, we'll get to this in a second. If we just come to my notes, this is what I'm referring to. So I'll often share this, but again, I don't want to project any of my biases onto you guys whenever I'm displaying what my thoughts are. I'm just trying to share the information, and then you guys use it to fit your trading style. But for some of you guys that I'm realizing are unaware of this, this is what I'm talking about here. I'm just looking at that advanced gamma page, and then I'm marking these levels on my chart. So this little blue here, I don't put these notes on my chart. I just take the screenshot. I put these notes on my chart, take the screenshot and share with you guys. And then I like to delete this because I like to keep my charts as clean as possible. But this is just so you guys know. The blue, if you're new, is the high open interest heat map, and that's just the concentration of where there's the most amount of open interest. How do I know that? That's what this is right here. You guys can see this high concentration of blue. I'm just going to mark that off, because usually price is going to be pretty choppy whenever it's in an area of a lot of open interest, as there's a lot of activity happening behind price action from the options market. So that's something I like to know. And then you guys can see here's a blue, here's the red bubble, here's a green bubble, here's another green, here's the absolute gamma strike, and so forth. I know this probably looks pretty tiny right now, but I don't want to get into every single thing on that page. It's just showing you guys this on my chart is just the translation of this. It's just coming straight from the data. It's meant to not be subjective. It's not meant to have any type of bias. It is just the raw, cold data. However, one thing I do know is when price is around a lot of high open interest prices, it will be a little bit choppy, especially when the absolute gamma strike is also here. So if we were to jump back now to the gold chart, that is, I was just calling this out here. If we just jump back to last week, Friday, my analysis sometimes will start from the week before. So the expectation for this week was for volatility to be suppressed. Momentum traders tend to give back a lot of their profits. We know the market just made a massive rally to start off November. However, whenever momentum like that kicks off, traders become addicted to that kind of momentum and they end up starting to YOLO, throw their money at a bunch of calls, or even worse, they start throwing their money at a bunch of puts because they think if the market goes straight up, it has to come straight back down. But then they forget more often than not, the market will actually consolidate and it spends less time trending than it actually does consolidating, obviously based on your time frame. So last week's analysis, this is again on the 3rd here, this is the Friday, so pretty early. It's just I'm already looking at what my expectations are for the rest of the month. I'm already running my analysis here, just sharing with you guys some of the thoughts. I think someone asked, you know, where did I get certain numbers from for an iron condor, so forth. It's just coming straight from here. So getting my bias, this is just one of the early days of QTA. I'm seeing a massive balance in the premium, so I'm expecting this to balance out by the next major OPEX, which happens to be next week Friday. And if it doesn't work out by next week Friday, then definitely by the quarterly OPEX, which would be in December. So all I'm expecting is by then these levels should balance out. Now they can balance out in this case if there's a lot of calls. Price can balance out if the market was to pull back, and then some of the premium ends up bouncing back into the put side. If price was just to consolidate for a while, then we'll start seeing the decay of some of these call options, and then maybe the market will slightly pull back. It doesn't have to full on retrace, but we'll see some sort of a balance that will happen here. And also, usually if there's a lot more put premium and very little call premium, then we'll definitely see some sort of a bounce. Whenever the imbalance is the opposite, where there's a lot more call premium than there's put premium, the market doesn't always have to pull back. It might just not go up as fast as it went up previously. If we scroll down here, this is just again showing you guys here. These are the major OPEXs to be aware of. You guys can see where this is where the bulk of the money is. This is basic, again, QTA. Some of the early days, this is one of the main things in which I was using. Then looking at the gamma profile for the rest of the year, forming some sort of an analysis from that, and then just showing you guys this is where the majority of the gamma exposure would be. Yes, this will change as price moves, but more often than not, it won't change drastically from this. So I like to do some sort of analysis in some of the earlier days. So this is a little bit of a larger analysis. Again, this is all the way up until the end of the year. If you're just looking to take a week-to-week analysis and as you're looking to formulate some sort of strategy or plan for the week, I suggest you just run it for the upcoming expirations. Keep it at that Monday through Friday, and then plot the levels on your chart. I cannot stress enough how helpful this will become, especially when it comes to actually creating a plan for yourself for the week. Now, as we look at our chart, let's actually turn on the levels right here. So this is the SPY. Let's go to make this max. I'm going to turn off all of my studies so we just see the levels that I manually put on the chart. And if we were to just treat these levels as basic support and resistance, again, forget any of the higher form of understanding of gamma exposure, forget some sort of forget the complex understandings of open interest and market makers and all the Greeks and all the stuff, all the jargon that tends to get confusing, and just think about this as support and resistance, but understand the purple level, which is the high absolute gamma strike for the week. So this is Monday all the way to Friday, all of the expirations combined at the start of the week. This was the strike price that had the highest absolute gamma. We can see price action was pretty choppy on Monday. Now for last week, as I was already doing the analysis here, this is around midday, 11:30, noon or so, as I was sharing some of my thoughts in the Discord. I mentioned that the expectations for volatility would have been much lower for this week. What does that mean regarding strategies? If you trade complex orders such as iron flies or iron butterflies, and you know already that the absolute GEX strike tends to be a magnet, especially when it is the weekly aggregate of all the expirations, that means you can run an iron butterfly to start off the week with the expectation that price will just consolidate and you'll generate profits through time decay. Or you can run an iron condor using some of these outer strikes, and then you're going to profit the same way. It's not a coincidence that I started the week with this spread right here. I opened this 3DTE. This was on the 6th, which was Monday morning, just a few minutes after the market opened. I decided to run this iron fly. My plan was just to hold until at least Wednesday, regardless of what the market did. I was expecting us to be around this range. This trade alone ended up netting over $1,700 if held until today. I didn't hold the trade until today. If we just jumped to here, you guys know what I ended up doing. I ended up adding another one. I did the video I released previously was on this, and then I turned it into this spread just to give it a little bit more of a range, but this is what I ended up netting on the overall position. It was about a 25% return on my margin. $500 is about 25% return on the margin used on the trade. So if you're in 3, 4, 5, 6, whatever your account size is, 25% return on margin for a trade that is something that I just opened and let data decay is a great return over 3.5 days. Another strategy using the exact same information was the calendars. This was a calendar in which I opened again last week, Friday, expecting similar results here. So a 10-11% return on these calendars that were opened last week. Didn't have to do anything, just held them with the same analysis and expecting the markets to be choppy for this week or hover around the high gamma strikes or the high open interest strikes. So between these two spreads alone, they yielded great results. Just expecting price to be choppy in this area. Now, once the week started on Friday, I didn't know this gamma profile was going to look like this, but at the start of the week, once I saw this profile looking like this and I saw all this high open interest in this range, I saw this absolute GEX right here. I saw where the highest positive gamma strike was and the highest negative gamma strike was, expecting this to just be the range. That's what's generally going to happen. You guys know this P1, if you don't know this, P1 is the strike price that's going to act as a very strong potential support resistance, and then the N1 strike is also going to act as a potentially very high support resistance strike. N just stands for negative, so it's the highest negative gamma, and P just stands for positive, is the highest positive gamma. P2 is just the second highest positive gamma. COI for me, it just means it is the highest call open interest. Then we have POI, this is the highest put open interest. 430, however, is the strike price that has the highest open interest combined. This is the gamma flip, so this is the strike price that if the price of the SPY were to get below it early in the week, this is where the overall net gamma becomes negative. But again, if none of that makes any sense to you, look at it from a support and resistance standpoint. What did the market do? It tried to hold a support level. Once it broke, it came down to this strike price here. Now, if we were to take a look at the price action on an individual days basis, that is something I have not done in a while. So here we go. This is the SPY at the start of the week. This is the quant trading app script here. This is the intraday levels plotted from QTA. What do we have right here? We have the intraday zone acting as support on Monday. What do we have? We have the highest negative gamma strike also acting as a potential support right here. That is 2 confluences. We had additional confluences, but I'm going to keep it simple because if I were to do a video just listing all the confluences, these videos would probably be 3 hours long, and there's already so much to cover within one video. But if we were to jump, let's see if I can find within the Discord itself an example of, okay, so here's the channel shared, right? Earlier in the week. Here we have on the Monday, there's already a trend forming for the week. We can already clearly see it here from Friday. I'm not sure, again, how many of you guys have a technical analysis background. That's why I just shared this, gave an unbiased opinion, just letting you guys know. If you're not aware, here is a channel for the week. This channel ended up paying dividends because it added confluence to what we already knew to be very significant levels. We already had this marked off as a significant level to start the week. We already had this level up here to mark as a significant level. As if we jump back to the chart and we take a look, now I want to split this for a second. This is the channel in which I'm talking about here on the SPX on the right hand side, and on the left we have the SPY. I drew it on the SPX this week just because it was a little bit cleaner. Price action was very clean, and if we were to take a look at it here, this is where we are here, this is where we are here. Then the next day, where is the SPX? It's up here. Where does the SPY go at the next day? There isn't really anything of major significance up here. Let's take a look at what we have if we were to turn off the Monday. Hopefully Monday already makes sense. You guys already see great opportunity right there. Let's close the Monday script and let's open up the Tuesday. So we don't have, SPY did not quite reach the intraday zone for QTA. However, what it did do, if we notice, it had its break and retest. Here was the breakout. We already can see the momentum. This is a strong, nice rally to start off the day. These are 15-minute candles. We have 1, 2, 3, 4, 5 15-minute candles straight without a red candle forming. In terms of how large was this rally, let's just see from right here to here, we're looking at about almost a 0.5%. But if we take it from all the way down here, which was the low of the day, to the high of the day, we're talking about almost about a 0.7, almost 0.75% in terms of the rally here from the day's low. And usually when we have that type of momentum, there will be some sort of a retest and buyers will try to defend that level. That is more than likely a 50% retracement right here. If we were to just put this on our chart, again, I'm just trying to showcase to you guys how you can combine and compound your confluences. There we go. Perfect. Right in the middle, 50% retracement. I'm just taking the low of day towards the high of day and then looking for that retracement. That is an intraday strategy in case you did not know. Again, exposing you guys to another form of confluence for you guys that are trying to build out some sort of a trading plan for yourself. I wouldn't use this for little small moves like here. You're not looking, it is viable for scalpers. Yes, I don't want to disregard what you guys are looking for. Sometimes you're just looking for a 20-cent scalp, a 15-cent scalp. If you're trading the futures, sometimes you're just looking for a 5-point, sometimes even a 3-point scalp with the ES. That's $150 with one contract, which is, for some people, that's a good trade. So I don't want to disregard some of these micro moves. But I'm talking about if you're looking for a larger approach to day trading and you want something that's less frequency and you want something to have a little bit more conviction or something that's a little bit slower pace, you can just let a nice big move happen for the day and then wait for the retracement on that move. And usually if you find confluence at that 50% retracement, in this case we have confluence. We already knew 435 was the highest call open interest strike, and it was also the second highest positive gamma strike. So now we have break, retest, confluence right here. It is also retesting all of this open interest. This whole zone, remember, is the high open interest heat map. So there we go. Here goes another opportunity, scalping back up to the high of day. Now if we go into the Wednesday, what do we have the next day? Now we're hitting P1. This is likely to act as some sort of resistance. We can see it in the rejection of the candles. Even after waiting 30 minutes for the market, because again, these two 15-minute candles are 30 minutes. We can see the rejections happening right here. This is still the work that takes 30 minutes at the start of the week, because these levels have not changed. They have not been updated. This is one set of work, 30 minutes worth of work. Look at how many trades we've been able to get out of this. If you trade non-directionally, you're in an iron fly targeting this absolute GEX strike. If you trade directionally, you're trading the support and resistance. You're not doing anything around the choppy absolute GEX strike because you're expecting price to be choppy. Now, once price moves away from it and then it is holding a level where this confluence is in support, your expectation would be for price to come back to the absolute GEX strike. The next day, price is choppy around this absolute GEX strike, but then it blasts off of it and then it retests a key level. Now you get a nice bounce. So we're already getting multiple trades again off of 30 minutes worth of work at the start of the week. If you're now starting on this, it might take you an hour to plot the levels and draw them out and make them pretty. But once you can dial it down, you can get fast and fast with it. You'll probably only need about 30 to 40 minutes to be able to do this every single week. Now we're here. Now we're here, right? We have another set of confluence. We have the upper resistance of this channel. We have the P1 strike. We have this whole zone is a lot of positive gamma. That's why I just marked that whole area as green. And then I'm just letting me know this is where all the positive GEX just rolls off. If you're unsure, that's when you can ask within the Discord, what do I mean by that? If we were to pull this up and we zoom in right here, this is that high. You see this big zone here. There's a lot of positive GEX in this region, but after 440, it just rolls off. And again, this is just the terminology in which I've made up for myself, but I realized it's valuable information, so I started sharing it with you guys, and now I'm just trying to explain it better and better in these videos, because I think a lot of you guys are missing this key ingredient right here. You can see the open interest rolls off. You see that it's not highlighting blue. QTA is going to highlight where the strike prices that have a decent amount of open interest combined, so calls and puts, but you guys can see anything past this level is pretty flat. That's why it's not highlighting in its blue, and the deeper the blue, the more open interest there is at this strike. You guys can see almost 80,000, almost 60,000. Those are the two that are the darkest, and then it goes another shade with these three, and it gets lighter with here and here, and then it just rolls off. There's nothing really here, and then there's nothing really here. There's nothing really in between here relative to the other strike prices. So I'm marking this big green area on my chart. So if we go back to this, that's what this is. Past 440, positive GEX rolls off. I'm interpreting that as there isn't really much of an expectation for the SPY to be above 440, which is why I started the week saying if the SPY got up to 440, I would be looking to short. Also clarify for some of you guys why I make this green is because green is just letting me know it's coming from the positive GEX, it's coming from calls, and then the red down here is letting me know this is coming from puts, which is negative gamma. I would more than likely look to be long if we got down in this region, so I understand that can be a little bit confusing, but that's why I'm sharing with you guys my own personal notes, this is how I journal at the end of the week. Exactly the way in which I'm talking to you guys when I do these types of videos is what I put in my notes, and I journal every single week. I've been doing that for years. I have screenshots of almost every single week for the past 3 years. I take a screenshot with the notes for myself. I have all the folders that are uploaded in a Dropbox so I can access them on my phone, iPad, any laptop in which I'm using. If I'm traveling, if I'm bored, if I'm on a train, if I'm on a plane, I'll just go back and recap. When was the last time the SPY hit 2 sigma? When was the last time the SPY did this? What trades did I run? What did the gamma look like for that week? And then I'm just building this framework within my mind, and it's making trading become simpler every single time I see the same things. Therefore, the 30 minutes worth of work is starting to pay off even more and more as time is passing by, because what's also going to happen is then I'll have this frame of reference for when the gamma profile looks just like this, especially when we have confluences with technicals. So let's move right along, because I'm glancing over at the time and I don't have much time left here. So let me just let's jump now to the 8th, which would now be the Wednesday. So what do we have? Market hits here and then it retraces, right? So now we come down to the intraday zone, right? We have our next indication right there. This is now the Wednesday. This is the intraday zone here on the SPY that we're looking at right over here. I can pull up the SPX too. It's the same deal, but just so you guys can see, all right? SPX, SPY, boom. I'm going to switch back to the SPY just to keep it consistent, because the SPY is the main one I use for this type of analysis. Let's just close that out, clean up the chart. So SPY hits the intraday zone. What do we have on our chart? Same level we drew from early in the week, 435. We know it is a significant level. So confluence, and then what do we have right here? It is also the lower end of this channel. Confluence 1, confluence 2, confluence 3. Boom, boom, boom. All of these things are essentially automatic because you guys copy and paste this script. So you didn't have to worry about calculating this. QTA drew it on the chart for you. You already still have the same channel if you copied it after I shared it, or whether you're aware of it or not, it's on your chart. It was shared again within the Discord. This right here is already on your chart from Sunday night or Monday morning. So in terms of your preparation for this day, you're just sitting back and you're just executing at what you already have analyzed, because you have a trade here, you have another potential trade here. If we were to head over to the Discord briefly, I have a screenshot right here of what the 8th looked like. This was it early in the day. You guys can see it sold off to the absolute GEX strike, which was also the max pain strike, and the absolute GEX strike for the 0 DTE. It was also the volume range. We can see that up here earlier in the day. This is also the volume range. It was also the previous day's option volume range, and it was also the #1 call volume. What do we know about the #1 call volume? That tends to act as resistance. That's why it's red as price is heading up into that strike price. Sorry about this little gap here on the charts. It was because of daylight savings time. So you guys know earlier in this week, the first 3 days of the week, there was a few bugs regarding the gap that was showing up in some of the charts. Again, it's just because of that 1 hour time gap. It was saying that this is when it just shifted everything over by an hour. So apologize for that. That's why the chart looks a little crazy. But then as you guys can see that now that has been adjusted and we're not seeing the gap. So it looks a little bit cleaner right here. But this is our rejection, and this is our rejection at 2 key major levels. If we were to come back to the chart, you guys, hopefully this is starting to sink in. Confluence, confluence, confluence. In terms of preparation for each day, the preparation has taken less than 5 minutes because we did the work at the start of the week, and then we're letting QTA scripts do most of the heavy lifting. And then we're also using our technicals. One trend line here, one trend line here. Actually, within TOS, you can just use this tool right here. I did this. It was as simple as if I just click this, drag it. Again, I'm going to draw a crazier trend line, and then I just hovered over and then click the other one, right? So let's remove this. I guess I'll show you guys that if you didn't know that's there. Let's just clear this. If I'm looking to draw the channel, I'm switching over to the channel tool. So it's this one right here. And then I'm just clicking this, just connecting the dots, and there we go. And then you can hover your mouse. I clicked once, and now I'm just moving my mouse up, and then I click again, and there we go. Automatically have my channel drawn in. It has the midpoint already built in, and you guys can already see the midpoint will act also as a support resistance. That's just basic technicals, and I have my settings adjusted differently. So obviously if yours does not look like mine, you have to change the settings to whatever you see fit. I'm going to remove that. Now let's just jump on to today, which would be the Thursday. And let's just turn back on my channel. And what do we have? Price is now opening up here. It is above 438, but it's not really going much further. We can see even if we wait that 15 minutes to see what happens, price gets rejected, comes back up, and now it's rejecting here. Again, we already know this area is likely to act as some sort of a supply zone. It's likely to act as some sort of resistance, act as some supply, and we can see it playing out in the price action. If we were to jump to see if we have any confluences with our SPY option volume chart, it is also the previous day's volume range right here. So remember, price wants to stay most of the time within the previous day's volume range. So that's the blue range that we see on our chart. So price opened up above it, but then it sold off, and then it ended up getting rejected right here. As you guys can see, it ended up getting rejected here. Where did it bounce today? It bounced right at the max pain, as well as the #1 put volume. So the #1 put volume is likely to act as some sort of support. In this case, that's why it's green here. And then the same thing with the #1 call is likely to act as some sort of resistance. So the previous day's #1 call volume, today's #1 call volume, those levels might end up getting a little bit more advanced. If you're new to this, you can just pay attention to the blue levels that you'll see. The dash blue ones are changing throughout the day because these are based on the current day's volume range. There is a video that is explaining this right here on the page. If we close this out, you can just click this link right here and it'll have a little bit more of a breakdown to this page. It is updating again in real time throughout the day. So I highly suggest this if you are a day trader, and just use it as additional confluence for what you already see on your charts. So what do we have? SPX sells off. Where does it come down to? Pretty close to the support of the channel, and then we have the SPY right here coming back down to our strike price, or our key strike price of the week, before it bounces right back up to here. Where does the SPX bounce up to? Right up to the middle of this channel. Where is that also in context of things? It's right here. Confluence, 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 yet again. Then price, we have some sort of catalyst, Powell is talking, whatever ends up happening. Price finally then comes down. Where does it come down to? 435. That's where the first major bounce happens right here, and it was pretty aggressive. What do we have? Confluence. So if you're a scalper, you have confluence right here. You have confluence right here. If we look at our overall chart, We have Confluence right here. 435 is the previous day's volume range, and you get your little bounce trade, a little bit of action right there if you're looking for a quick scalp before price ultimately ends up selling off, and then we close right around the high negative gamma strike, and then we'll see where things go from here. So we have a break of the channel. We're now in negative gamma territory, and we'll see what happens tomorrow. But I wanted to do this video mostly just highlighting as briefly as I can or as quickly as I can in under 45 minutes. I'm happy I got this video to be just a little over 30 minutes, but this is what I'm just trying to show you guys. One session of work to start off the week has provided multiple trades every single day, and then we just added a little bit of technicals with one channel, and then we're just sitting back and taking trades. And this is about as a dream scenario as you can, ask for, especially for a person that's been trading for a while. If you've been trading for over 5 years and you're used to waking up, hours before the market opens, and you're drawing all sorts of trend lines and channels and all sorts of support resistance levels, and you're tracking all this stuff, and you've been doing it for a long time, it gets very difficult to sustain that same level of time and preparation, especially if your things are growing outside of trading in life for you. If something, you're getting a promotion of job, if you're starting a family, if you're moving, if you're buying a new house, you don't want to have to compromise too much of what you do in trading. And the beauty of the market is it provides an opportunity to create income for yourself, but you don't have to spend as much time as you do in other aspects of your life. If you're working a 9 to 5, you know the hours you have to put in to get paid. If you're running some sort of a business, you know how much work it is to put in to actually get a business off the ground, especially if you have employees, if you have inventory. But yet the market is one of the only beautiful places where we can just push some buttons on our chart and create some sort of income for ourselves. And if you can learn simple practices or simple disciplines that you can teach yourself and not have to spend so much time every single day, that we know is the ultimate luxury, to be able to have as much time in the day to do as many things as possible. Hopefully this video helped you guys, and I will try to do another one like this. And again, at the end of the month, I'm going to do one at the start of the week, and then I will probably do one live with a webinar with some of you guys actually on a Sunday night with me as I walk you through this and answer some of the questions in real time. So hopefully this helps. Let me know, leave a comment down below. If you guys are in quant trading app, let me know in the Discord if you appreciate this video, because I haven't been hearing much regarding this approach when I share this on my notes on a Sunday. And I know some of you guys are new, and the guys that have known this from since back in March when I started sharing this, I'm pretty sure you guys are doing it on your own, and you guys have been pretty quiet. But some of you new guys, let me know if this helps. Enjoy.